Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, the jobs report came out and it was positive depending on which way you look at it. So we gained 263,000 jobs in November. And for regular people like me and you, this is a really good thing because you don't want to see people losing jobs. And in every measure and every way you look at that, that is usually a good thing. However, Wall Street looks at things a bit differently. So in today's video, we need to explain where are these jobs, why does the jobs report matter, and then what are the pros and cons of adding more jobs than what was expected. So good news, just like we have been talking about all week, there are 1.7 jobs for every one person here in the US. That gives you, the people, right, more power, more ability to find a job that you like and even compete or have the jobs compete for you and increase those salaries. That's great for us, right? However, on the business side, if you're not looking at the human cost and impact, the downside is, well, if I'm a company, let's say Disney, that's struggling a little bit, or any of these other companies out there, that I now have to pay more, and that's going to hurt my bottom line. This is the case, the negative case for recession. You've seen some economists come out and you've seen some Wall Street people say, hey, look, this is not good, that we need to continue raising interest rates essentially to slow down job growth, which is not great, and then force people into some really tough economic situations to slow down inflation. Now, that's not great, and I get the math point of that, but that's not necessarily the route that we have to go as an economy. We could just, especially if I'm a business owner or a CEO, say, look, instead of trying to hit a new quarterly goal of bringing in $10 million, maybe I'll settle for 8. Now, not everybody's going to be happy with that, right? However, that is the other way that you could lower inflation without hurting the entire economy. But that's the two sides of it. Right now, job growth is still high, which for me, I've talked about this before, I don't know what's going to happen in 2023, whether or not it's going to be a recession, because again, job growth is high, spending is normal, inflation is high, but it's starting to come down just a bit. Where are we going here? Where it makes it very difficult to determine where we're trying to go. But then also, no one wants a recession. No one wants to see slow job growth and people starting to get laid off. So it's not necessarily the route that you want to take or the take that you want to have to be the fix-it person for where we are in an inflationary environment. But in either case, that is the good and the bad. Great for people like us, great for people who are looking for jobs, getting new salaries, all that type of stuff. Not all that great for people who are running companies and trying to figure out how they're going to sustain their bottom line or increase their bottom line, which is what most CEOs want to do. And honestly, what most investors want as well, because when we start to look at balance sheets and income statements, we want to see quarter after quarter, year over year growth. I don't want to pull up something and say, hey, look, whether it's Disney or something where we say, look, you're making the exact same amount of money, Target, for example, that you were in 2018. You're actually going backwards. We don't want to see that, right? That says, look, we might not want to invest. So CEOs have to make some tough decisions. Now, the other side of this is the fact that a lot of the jobs were primarily in two areas. So remember, 263,000 jobs added in November. It was healthcare and travel/leisure. 170,000 jobs were just in those two sectors, with everything else kind of trailing behind. I actually put the chart here from CNBC where they note where all those jobs kind of came from. So you can see 88,000 in leisure and hospitality, and then 68,000 in healthcare and social assistance, then government, and the list goes down. Is this an indicator of what's going on in the market? A little bit. So one, we know healthcare has been a strong spot. We've been saying that for a very long time now, and it's something that really isn't going to change. COVID, unfortunately, is still a part of this because people are still getting sick and still going to the hospital. So that's going to be a spot of importance. Also flu season as well. But then also think that people are still getting older, and healthcare is still going to be an increasingly important space as, again, Americans just get older. They need to take better care of themselves. I say themselves like I'm not one of them. That includes companies like Danaher's company I own, DHR, and others, right? And you can throw in healthcare insurance companies too if you want to kind of lump them together. In the leisure hospitality space, I don't have any stocks that actually come to mind. The airlines aren't doing amazingly well, but that's something that I'm interested to find and see, because if they are hiring more people, that means you got more money and that industry is growing. If that industry is growing, it might be some returns for investors. So that's a space that I would definitely look forward to seeing, like, what is there. In fact, as I'm thinking this out right now, we might want to do like a watch list for at least the top, let's say 3 or 4 categories here, and we kind of break that down over the next week and see what makes the most sense here. Now, the other thing at the bottom, and I'm looking at it here, transportation warehouse as well as retail trade are the 2 spots that lost the most jobs, with retail trade losing close to 30,000 jobs. That is something that you do want to pay attention to, because it does show us, especially for companies like Amazon and others, they overhired in 2020 because they were getting the level of sales that we have not seen before because of the pandemic, and they slowly started to cut back. This does not necessarily include Facebook's layoffs, and that was, I want to put this air quotes, only 10,000. It's a lot if you are one of those 10,000, right? But when we take a loss of 10,000 compared to adding 263,000 jobs, comparatively, it doesn't feel the same level of weight. But notice here that tech isn't really showing up here, though it's also not on the highest end of hiring either. So a lot of those layoffs that made a lot of headlines aren't really that big in scope so far to this point. Obviously, we wouldn't want to see that either, but do keep those things into context. So right now, retail trade, not necessarily the best place, probably not the best place to invest either, and we can kind of start to break those out. But it seems like healthcare and leisure/hospitality are some of the top places to, one, get a job, but also consider tailoring your list around those companies. As you know, we're moving into December, we're already in December. We're moving towards the end of December and the new year, which is when I take the deepest look at my portfolio and decide what to keep and what to get rid of. And this is just some of the information that I use to kind of help me tailor and whittle down that watch list. So that is what you need to know about the jobs report. Generally pretty good. You want to see people get more jobs. You don't want to see unemployment, but also you do want to curb inflation. And if salaries keep rising, which we do want, you don't want to continuously bid out people for other goods. That makes everything expensive for everybody. The other side of this, and we probably have talked about this before, is the supply chain piece, which is still an issue, not as bad as an issue as what it was a year and 2 years ago. You could, increase supply. It's more difficult to do than to say, but doing that and increasing the supply of stuff, the supply of goods, could help also offset some of these prices. Problem is, that ain't nothing that the Federal Reserve can do. That's not within their purview. That's within each individual company and sometimes on Congress, depending on what type of thing we're trying to increase. The CHIPS bill is a part of that, right? Trying to build our own chip factories to help with our own supply chain and national defense. That ain't gonna take effect for a few years though, right? We need relief now, right? Because everything is far too expensive. All right. That is it for me. If you want to learn more about investing, especially how to break down trades, how to understand the stock market and decide what to invest in and when to invest in it, you want to make sure you check out the members only. I've talked about this one before. We've done a few videos on some of the best stocks in the financial sector. You will notice here that finance gained 14,000 jobs. It was a stock that I really, really like that we discussed inside the members only. We're going to discuss even more. I had mentioned that there is a very delicious and tasty stock that I have had my eye on. I've decided that I'm going to break down that stock, including where I would decide to hop in and out of that stock if you're looking to do a trade or if you're looking to buy for the long term. You don't want to miss that. I will likely get that out inside the members only, if not tonight, at some point on Saturday. I'll be working over the weekend for our members, so make sure that you are in our members only. All right, that's it for me. I'll talk to you later. Bye.